This is the Asia Trade. I'm Paul Allen in Sydney, where markets have just come online.
I'm Haidi Stroud-Watts. The top stories this hour. A flurry of new polls unable to separate the US presidential contenders ahead of election day as traders brace for volatility around the vote and the outcome.
Asian equities set for a mixed start after Friday's Wall Street rebound. Central banks also in focus. There's an RBA call tomorrow ahead of the Fed.
And Westpac increases a share buyback as profit beats expectations, but Aussie banks face a challenge this week in justifying sky-high valuations.
We're up and running for another week here in Australia. Of course, we have a staggered open, so we don't want to say too much about what's happening. We're just higher by a couple of points at the moment. Japan is going to be closed today. It's a public holiday, Culture Day, no less. But we'll be keeping an eye on Korean stocks as well. We've got Kospi futures sort of hovering a little bit softer at the moment. It wasn't a great end to the week for some of those big tech names in Korea, but we might see a rebound. It was a reasonable day to close out the week on the Nasdaq. Got the yen there, much stronger than it was where we started a week ago, 152.37 at the moment. Expecting a lot of volatility around the offshore yuan this week, Heidi.
Volatility around just about every asset class, right? And it is really this hotly contested US presidential election. Not to mention we have a number of central bank decisions, including the RBA and also the Fed, and you know that sort of also correlates a little bit in terms of the political risk and the fiscal risk in particular that could make the Fed's job a little bit harder depending on who takes the White House. But take a look at S&P futures. We're looking a little bit to the downside there, but we're really seeing that kind of retrenching of positioning across asset classes, whether you're taking a look at dollar yuan volatility hitting that record high last week, S&P 500 options implying volatility outpacing the realized swings as well. So everything from stocks to even crypto, which has been kind of that favorite Trump trade, bracing for the election-related volatility. So climbing through most of October, even as we see those kind of muted swings for equities. NASDAQ 100 futures also a little bit to the downside there. And taking a look at treasuries, which has been also the kind of interesting story in terms of just how big the moves has been over the past few weeks. But we're starting to see that pull back there as well. Bond traders kind of preparing for that momentous week, reeling in those wages, trimming their futures positions, investors going a bit neutral and just not being willing to take these big, bold bets that we've seen in US treasuries. Crude, another one to watch. These OPEC plus delays the supply restart again as prices continue to struggle, but we are seeing Brent crude up by about 1.3% at the moment. Well, US Vice President Kamala Harris and former President Donald Trump remaining deadlocked in opinion polls ahead of Election Day. This is a flurry of new surveys that has them neck and neck nationally and across the key battleground states that will decide the outcome. Our political news director Jody Schneider joins us now. So, Jody, there may still be some encouraging signs for Harris out of these polls, particularly this key Iowa poll, which has a pretty good track record over the past few years.
Yeah, the news is that they are neck and neck, and it could go either way, particularly in the swing states that they both very much need to win to get to 270 electoral college votes. That's the prize. The popular vote is kind of an also-ran these days. It's really the electoral college. But there were some signs for Vice President Harris, the Democratic nominee, as you note. One was that Iowa poll, which has had a very good track record. It's a state that Donald Trump won handily both in 2016 and 2020. It's viewed that it could be an outlier, but it has her ahead there. And a lot of that shows that she is making headway with women voters, a lot of them voting on the abortion issue and reproductive rights. There's some also green shoots for her, if you will, in terms of the New York Times Siena poll showing her slightly ahead in Nevada, North Carolina, and Wisconsin, swing states. Wisconsin that she'll need to win, that's viewed as being more in her camp, but a win in Nevada or North Carolina would make Donald Trump's path to victory much more complicated. But again, these are all within the margin of error.
Yeah, so it's looking like a photo finish. Is that the way that both candidates are campaigning, though?
Yeah, absolutely, Paul. Both of them are barnstorming. Who knows where they're getting their energy right now, but they're crisscrossing the country, ending up mostly now in those swing states, those blue wall states of Wisconsin, Pennsylvania, Michigan, and in North Carolina. They did a southwestern swing and now are back to the East Coast states. But they are both making their arguments based on the fact that every vote counts at this point. Early voting is now closed. It's all about those who show up on Tuesday. But early voting was huge. Almost 70 million people voted early, either by mail or at early voting at their polling places.
Jody, have we seen their arguments or policies kind of messaging changed, or are they sticking to the core themes?
Yeah, they're largely, Heidi, sticking to their core themes. Kamala Harris's message is that Donald Trump will be a choice for the country that would send things backward in the wrong direction. And she's used his own words on the campaign trail to continue to make that clear, while at the same time trying to be seen as a competent, reasonable voice and using her experience as vice president. Donald Trump's message in his ads is about the economy, which, according to polls, remains the #1 issue. And in his ads, he hits that hard. On the campaign trail, though, he's Donald Trump, and you never know quite where he's going to go. But he is hitting her hard, hitting her record hard on the campaign trail. So they're both kind of sticking to their talking points, but really making that huge push, and they will be doing that tomorrow, the last day before Election Day.
Bloomberg's political news director Jody Schneider there. Relations between the US and China have faced multiple challenges in recent years, and both Republicans and Democrats are signalling a tough stance towards Beijing. Our chief North Asia correspondent Stephen Engel takes a look at how the US election is being viewed in China's corridors of power.
While Beijing likely isn't enamored with either Donald Trump or Kamala Harris, and Chinese leaders are not showing their hand, it would be overly simplified to assume China would prefer, say, continuity over unpredictability. Like the entire U.S.-China relationship, it's far more complex than that.
I think from a Beijing standpoint, they would prefer Trump as president than the Democratic candidate, because the track record shows that Donald Trump is not as anti-China as he's perceived to be.
And yet, Trump has made it clear that he would continue to take a hardline approach on trade with China, threatening sizable tariff increases on all Chinese imports.
I'm telling you, outside of love and religion, it's the most beautiful word there is, tariff.
Now, he has this crazy notion that putting a tariff of 60% on every single product imported from China is a good idea. Let me just tell you, this man has so little understanding of tariffs, he thinks that China pays for them.
Inflation, no doubt, is on the mind of U.S. voters, and Harris has blasted the former president's tariff plans as a Trump sales tax. And yet, the current Biden administration has maintained Trump-era tariffs on some $350 billion worth of Chinese goods, and even added billions more on other Chinese products, including electric vehicles. Perhaps by design not to antagonize American workers in manufacturing swing states, Harris has been less specific on what her trade priorities would be, repeating that America must protect and build its competitive edge over China in critical sectors like advanced computing and semiconductors.
The third pillar of our opportunity economy is leading the world in the industries of the future and making sure America, not China, wins the competition for the 21st century.
There was a narrative that I think that was prevailing when this administration took office, that the United States was sort of on the verge of being surpassed by China as an economic power, that the United States' influence was waning in the world, that China's influence was on the rise.
And that's where geopolitical differences between China and the U.S. also hang in the balance. No one knows for sure how either candidate will deal with contentious issues like Taiwan, the South China Sea, Ukraine, and the Middle East. Not to mention trade policies based on national security concerns.
If Kamala Harris comes in, I'm sure it's going to be status quo, and we'll have the continuation of the current policy, which is driven by the national security lobby. To me, this is the policy that hurts China the most.
Or does it? China's not saying.
我们多次说过，
We have repeatedly stated that we do not comment on the U.S. elections and oppose any U.S. individuals making an issue of China during the elections.
拿中国说事。
At some point, we know China will inevitably take a stand, regardless of who's in the White House. Stephen Engel, Bloomberg News.
Well, joining us now is Alicia Garcia Herrero, Chief Asia-Pacific Economist at Natixis. So, Alicia, both Trump and Harris, as we just heard, running platforms that propose to be tough on China. So, regardless of who wins, how do you see China responding in an environment like that?
Well, quite differently. If Harris wins, China will test Harris because Harris is new to the job, no matter whether she's been vice president, and Trump isn't. So I expect China to, if Harris wins, to really, put a little bit of pressure on to see how she's going to react. That could be the Straits, the Taiwan Straits, the South China Sea. Harris needs to show that she's strong enough to withstand that testing. And I think that's how it's going to start if she wins. So it's very, very different, actually, in terms of China's short-term reaction. In terms of short-term reaction, I think that's why we have also the NPC during these dates. China will make veiled or unveiled, loud and clear statements, especially if Trump wins, in terms of a bigger stimulus package to withstand the pressure of the tariffs so that the market knows that China is ready and that these tariffs are not going to hurt China. So these are the two things we'll see immediately.
In terms of a potential Trump presidency, on the one hand, he talks a very tough game, but on the other hand, he does enjoy taking credit for making deals. Which of these two potential Trumps do you think is going to be the stronger factor should he be victorious this week?
Frankly speaking, I think China does prefer Trump, and I can understand that because tariffs are things that you can carve out. You can sign a deal. You can sell. This is the phase one deal, December 2019, right before COVID. China can do that well, and Trump will be happy to show a deal. So now, I fully agree that the Biden administration was kind of much stronger, stricter, and in a way hurting for China because it was all about technology. It was about tech competition, tech containment, export controls, outbound investment screening, you name it. And that is more painful beyond the fact that Biden was much more forceful on Taiwan than Trump would ever be. So for me, it is quite clear. And on top of that, Harris can be tested because she's not been so clear in the campaign. I remember that she was asked, what's the country that, that is most, in a way, I wouldn't say in competition, but most of the problem for the US. And she mentioned Iran, not China. So for me, Harris will need to show her strength and China will profit. But at the same time, China knows that she will continue tech competition. So in that regard, I think Trump is a better deal because they can sign the deal.
You talked about the tech curbs, and we've seen, moves from the Biden administration even over the past few weeks on some of these industries. We also know that these industries are key to Xi Jinping's economic revival plans. So what's your assessment in terms of how much they're working and whether China can continue to find other markets?
Yeah, so good question. We've actually been doing research on patents and dividing, patents into what we call radical novelties. So, where the real innovation is. And I wouldn't say they're hard neck to neck as opposed to the elections. The US is still leading AI and quantum especially. So I think, these restrictions might not be, feasible for a very long time, but they are hurting China's moving up the ladder. And therefore, any additional measure, as you said, we now have permanent residents also being affected, not only U.S. nationals, in the tech controls from the U.S. So all of this does hurt China, and I think you can just remember San Francisco. It was all about scientific cooperation and reducing tech controls. This is what China cares about. That is why China prefers Trump.
We've seen Beijing also easing curbs to try and entice more foreign investment, right? And as you say, US-China direct investment is at a pretty low level these days anyway. Do you think there are meaningful implications or opportunities for other trading nations, emerging markets, for example, depending on how this relationship develops?
Well, the other trading nations have already been profiting, yeah? I mean, we have a lot of FDI coming into Mexico, into Vietnam, Malaysia. I mean, this trade has been there for a while. ASEAN has been receiving more FDI than China for years already. So, it is clearly the case. Now, this is all about tariffs. Trump could make this trade, this preference even bigger as long as tariffs go all the way to 60%. But at the same time, Trump will need to negotiate with Mexico, or put it this way, Mexico will need to negotiate with Trump, USMCA, and probably the rules of origin will be much stricter. So Mexico will have a hard time to continue to do this, in my view, because of the free trade agreement with the U.S. But Vietnam, rest of ASEAN, I think that idea that they can bypass U.S. tariffs will continue.
Alicia, do stay with us. Alicia Garcia Herrero, Chief Asia Pacific Economist at Natixis, will be back with us because, of course, a lot to talk about when it comes to the central bank aspect as well. Still ahead on the Asia trade, taking a look at the uncertainty facing Japan as Prime Minister Shigeru Ishiba scrambles to retain power. Lombard Odier tells us how markets are digesting this tightly contested race to the White House. Plus, Albright Stonebridge Group joins us as we continue our countdown to the US election and talking further about the impact on China. This is Bloomberg. Well, aside from the high-stakes election in the US, markets this week also bracing for several key rate decisions. Economists expect the Federal Reserve and the Bank of England to each cut rates by 25 basis points, while central banks in Australia and Malaysia may hold.
With that in mind, let's bring back Alicia Garcia Herrero, Chief Asia Pacific Economist at Natixis. Alicia, thanks for staying with us. So central banks are responsible for a third of the global economy meeting this week. So just a couple of days after the election, let's start with the Fed. We did have non-farm payrolls growth slowing towards the end of last week. We've got a chart here that illustrates that. Was that the green light then for a 25 basis point cut from the Fed this Thursday?
Well, we at Natixis, our research team in New York, is expecting a cut, but I wouldn't say that the non-farm payroll has a lot of information. As you all know, it is very blurred by the hurricane. So I would say it's mostly about having 3 cuts. We have the 50 already done, 25, and that's it for the year. Because right after the elections, and this is going to happen right after, but we might not even know who's won by then. But the point is, it's right there before somebody takes over. And I think that before is important because it might be hard for the Fed to cut right after. Therefore, I think this is a window of opportunity. The data is not very, very telling, but kind of the path is known. So it's a cut for us indeed.
Heading into 2025, though, does the picture become a little bit less clear? Because if we look at the spending plans and taxation plans of both candidates, do you feel like there could be some upside risks to inflation here?
Yeah, that's exactly why I think they can use this window of opportunity, because right after, especially both of them, but I think Trump especially, it might be hard because the fiscal stance that is going to be even laxer might not allow the Fed to cut. Plus the tariffs. So, or even immigration policy, yeah? All of this is inflationary. So if Trump wins, I think the Fed might have to pause after this cut. And therefore, this cut is, in a way, welcome because they do part of their job and then they move to what next. And that what next is inflationary pressures, potential inflationary pressures from these measures.
One of the elements of the so-called Trump trade is obviously what we've seen with Treasury yields and a stronger dollar. Is that a clear direction depending on the outcome and also depending on, the messaging from the Fed?
Well, I mean, Trump tells us that he wants a weak dollar. Is that he says he's going to do everything, but what is needed for a weak dollar, except of course if he intervenes, in the market, whether it's capital controls, you name it. But in terms of his fiscal policy, obviously this is not going to bring a weaker dollar. And if the Fed reacts by delaying cuts, even less so. So if there's this contradiction, inherent contradiction in Trump's speech or Trump's narrative about the dollar and what he seems to want to do about the dollar. So it's very hard to tell because, again, one cannot fully rule out, I would say I wouldn't say crazy because we leave it there, but strange measures on capital controls for the reserve currency of the world.
Disinflation in Australia has been, some would say, stubbornly slow. Does this sort of, coupled with all of the global risks, give the RBA even more reason to just stay on that hawkish pause?
Yeah. We used to call it hawkish pause, and you're right. If you look at service inflation, we could still call it hawkish pause, or even actually vacancy data. All of these shows like, okay, still, not clear that they have the room to cut, and they won't cut. We argue that they won't cut this week. But the reality is that when you look at headline or average trim inflation, or you look at where the rest of the world is heading in terms of cuts, except for the BOJ, I think next year they're going to cut. They have to cut. I mean, also the debt service for households is grown enormously, so they will have to cut. So the question, maybe it will be a pause without a hawkish message like last time. Maybe they might want to start showing the direction for next year. But indeed, I don't think they can cut now, no matter the headline inflation being better than expected.
Alicia, always great to have you with us, particularly at the commencement of this key week. Alicia Garcia Herrero, Chief Asia-Pacific Economist at Natixis. More ahead on the Asia trade. This is Bloomberg. So much volatility at the start of this key week. Take a look at what we're seeing when it comes to oil, with crude rising, OPEC Plus delaying a production increase by a month, so that'll keep supply constrained for December. And we're still watching tensions in the Middle East with threats from Iran against retaliation to Israel there as well, also boosting prices. Also, a quick word on iron ore. We did see that weekly gain, the first out of 4 weeks, really supported, Paul, by these suggestions in the data, the property data, that the China stimulus story is starting to take hold.
We've got a stronger Aussie dollar as well, just knocking on the door of 66 cents US. There is, of course, the RBA decision due tomorrow. We are expecting another hawkish pause, staying put at 4.35%. It's been nearly a year now. The yen much stronger as well, but in terms of volatility as well, the yuan expected volatility over the next week, highest since 2011. More ahead on the Asia trade. This is Bloomberg.
What you're seeing is a repositioning that people were hedging a little bit, because the one thing that would have really moved things is a much stronger number, not a much weaker number.
Labor markets have been normalizing. They're not collapsing. They're normalizing. They're still trying to stick the soft landing, and I think the soft landing is still the message.
We got to issue an awful lot of debt at the same point in time that inflation, I would say most of the improvement in inflation has happened. Now you got base effects that aren't going to give you that much of a tailwind.
You still have a Federal Reserve which is on track to gradually reduce interest rates. Interest rates are the thing, I think, at least the policy rate is the thing that kind of stands out as still being in that extraordinary territory.
Some of our guests on Bloomberg weighing in on October's US jobs data. And of course, those payrolls not growing as quickly as expected, and payrolls growth either was also slowing down. So really adding to the sense that we're going to see a 25 basis point cut from the Fed this Thursday. But we see futures after Markets in the US gained on Friday. Futures now trading a little bit softer. Volatility, very much the watchword at the moment as we close in on the US election. Polls suggesting that this is on a knife edge, but in 48 hours' time, we'll have the answer. For more, let's bring in Garfield Reynolds, who leads our Markets Live Asia coverage. So, Garfield, volatility does seem to be the watchword as we count down to the polls. How are traders positioning ahead of this?
Well, Paul, a lot of traders they've sort of done their positioning and are dusted, and they're going to wait until they get what the result is or isn't, depending. Remember last time we didn't get a final call on Pennsylvania until the weekend. So, there's plenty of signs, in fact, that many investors have made their positioning calls and taken some money off the table, perhaps left other long-term calls in place, expecting that the most severe outlier results are not going to occur. That leaves the people that are trading very interested in riding the swings and roundabouts that we're seeing across assets. A lot of assets today, a lot of currencies in particular, they're gaining today after having dropped on Friday. So you can see they're remaining within the recent ranges. And if they start to challenge the tops or the bottoms, they'll come back. So that underscores the idea that we've got a lot of short-term trading that's looking to capture that volatility, to leverage that volatility into winning trades, but a reluctance for a lack of willingness to really bet hard on one extreme or another. I mean, talking of betting, even in the betting markets, we've seen the betting markets were showing very strong odds for Trump. Just a week or so ago, they've now come almost back to flat as we go into the election, which gels with opinion polls that are showing, it's a coin toss.
Are we also seeing some investors keeping at least some of their powder dry, given it's not just, yes, you have election day, but then also the Fed, and then also a pretty big chunk of major US earnings to come as well?
Yeah, that's also a part of it, and it's another reason why you would expect some investors to have kept money off the table. One example, although these figures are for the end of September, end of the third quarter, but Warren Buffett's increased to a fresh record, if you want to say that, increased to yet another record, the amount of cash that Berkshire Hathaway is sitting on. So he's voting with his feet and saying, it's not necessarily worth the candle to get into a lot of these trades now. We do have a lot of cash sitting on the sidelines too when you look at the numbers from money market funds and so on. So that's part of why there's also the potential that unless some of those left tail outcomes, a contested election or a sweep for either side that's seen as disrupting the status quo, unless you get those sort of results, there's a very strong chance that risk assets, especially US stocks, are going to climb, whether it's Harris in the White House or Trump in the White House, because that cash is going to come back in off the sidelines. And that cash is sort of, if there's a risk premium when you're going into an election like this, and investors will go, well, in that situation, my less conviction trades, I'm not willing to put them on now. I'll put it in cash, wait till after the election. Then I can get a better handle on whether that trade that I was looking at does make sense now that I know what the election has produced.
Garfield Reynolds, who leads our Markets Live Asia coverage there in Singapore. Well, Berkshire Hathaway's cash pile reached a record $325.2 billion in the third quarter. The conglomerate also cut its stake in Apple again, this time by about 25%. Our finance editor Adam Hay joins us now. So what do we know about this, given that he hasn't shared sentiment about this particular stock since about May this year?
Yeah, I think it's quite illuminating, Heidi. I think it does tell you a lot about the thinking around overvaluations generally, but specifically, first of all, in Apple. I mean, a 25% reduction is obviously material. It's a continuation of, the vibes that we've heard already, that he's talked about the tax implications of why that's happening. And it's a material decline, of course, in their overall holding in Apple. We did hear from the company itself, of course, last week. Apple said they're projecting, low to mid-single digit growth in the December quarter. So that is notable that this is coming around the time that the company itself is guiding towards those kind of numbers. And analysts, I think, in their reflection and the way that the news has been taken, is that it kind of makes sense for Berkshire to be lightening their position as they have done here. So yeah, continuation of the theme really, but clearly quite a big pullback still. So it shows you some of the sentiment around some of those big tech names that big investors are withdrawing from in some part.
How about Berkshire's position in equities more generally?
Yeah, well, Paul, overall, it's a continuation of a theme of dialing back the equity exposure. And you singled out that cash pile number, which now stands at $325 billion. It speaks to really a sentiment of them not finding an overriding number of opportunities to deploy their cash. And of course, the 35 billion reduction in equity position this year is at a faster pace building on this year than we saw last year. So clearly that, coupled with the fact that they're not buying back their own stock at the moment, does give you some kind of indication as to the sense of wanting to keep that cash pile very, very strong, still waiting and wanting to be nimble to opportunities, but just at the margin there, dialing back some risk in equities.
All right, finance editor Adam Haig there. And you can follow more on all of the day's trading on our Markets Live blog. And that is on the Bloomberg at MLiveGo. You can get a market rundown in one click, and there's commentary and analysis from Bloomberg's expert editors, so you can find out what's affecting your investments right now. This is Bloomberg.
Take a look at what we're watching when it comes to trading in the yen. Of course, Japanese markets are closed today for a public holiday. It is Culture Day there being observed. And of course, we have seen that weakness in the dollar as US polls continue to signal at this late stage that there is no clear leader going into the US election. We've seen the greenback really slipping against major currencies after the surge of strength on Friday. Dollar yen, they're holding at about that 152.29 level. We're also seeing sort of similar moves when it comes to euro yen as well. The Aussie dollar, though, seeing a little bit more upside as we head into that RBA decision day, given that we're expecting a cautious hawkish pause, perhaps is one way to characterize this going into that decision. Well, Japanese Prime Minister Shigeru Ishiba's ruling coalition continues to scramble to try and rally support, with a deadline to form a new government looming at the end of November. Japan is also facing uncertainty over the US election and who will be the next leader of its most important ally. Joining us now is Christopher LaFleur, who's the chairman in AmCham Japan. Christopher, great to have you with us, particularly at a time when we're seeing significant levels of both the domestic and external political uncertainty.
Absolutely. Well, I can tell you that American business here in Tokyo is very much focused on political change, both in Japan and upcoming in the United States. And we'll see, depending on the outcomes of negotiations that are going on here in Japan among the parties trying to put together a new governing coalition, as well as the results of the U.S. election tomorrow. How that policy change might unravel or might present itself rather over the next few days and months.
Is there a view within Japan, and certainly, of course, it depends on what happens, what coalesces with the coalition efforts, but is there a view in terms of a preference of the result this week?
I don't think so. I mean, in Japan, the expectation, of course, is that the ruling coalition will continue to be centered on the Liberal Democratic Party and Komeito, the coalition that has been effectively governing the country over the last decade and a half. But they do need an additional partner to join them, at least on key votes. And those negotiations are clearly going forward. And from what we're hearing so far, the focus in those talks is going to be on ways to increase the take-home pay of Japanese workers. And in terms of domestic demand, that's probably a positive indication for the future.
How stable do you think any new coalition might be? Do you think there's a possibility we could see fresh elections in Japan within, say, 12 months?
Well, there will be new elections in Japan as scheduled every April. There are national, local elections. And then this coming summer, there's going to be another upper house election. So those are already in the calendar. But in terms of another lower house election, I think we're likely to see that be postponed for the time being. I think this new coalition, assuming it's formed successfully, is going to take some months to determine its path forward and its durability. But recalling that the main partner, the main new partner in these negotiations is a party that has voted already on a number of occasions along with the former governing coalition. I think one might expect that from a policy point of view, there'll be some continuity and therefore some durability to this coalition arrangement if they can settle the terms over the coming days.
We've seen a little bit of rhetoric in the build-up to this coalition forming around the BOJ, various politicians weighing in with their thoughts on tightening. Do you see the Bank of Japan coming under increased political pressure?
Well, I think the Bank of Japan's route forward is already fairly well determined. And as they look to normalize policy, the key question is going to be rather what the data is presenting rather than the political pressures. Obviously, politicians, leaders from various sides of the debate are going to be weighing in. But fundamentally, the long-term direction for the Bank of Japan has been clear for some months, and we're really only talking about the specific timing for some specific and incremental moves.
We saw the former PM Shinzo Abe meet with the former US President Trump 14 times during his leadership, right? And that really helped cement the solidarity of that alliance. Do you think that could come into question, particularly given that we know that former President Trump is likely to again maintain that pivot away from the region?
Well, certainly the relationship between former President Trump and former Prime Minister Abe was a very important factor in U.S.-Japan relations when they were both in power. Going forward, however, I think we need to recognize that fundamentally the U.S.-Japan relationship has been the keystone, certainly of U.S. security policy and Japan's security policy over many decades. And political transition in either country fundamentally hasn't really changed that reality. So irrespective of who wins in the U.S. In tomorrow's election, I think you can expect the U.S.-Japan relationship, the U.S.-Japan alliance to remain strong and firm. What perhaps will be interesting to watch is how on the margins economic policy shifts. One will recall that under former President Trump, there was a focus on bilateral trade negotiations. And indeed, a round one of those negotiations was successfully concluded during that period. And with the current administration, under President Biden, there have been a variety of efforts kind of across the board, particularly focusing on areas like energy and climate change and sustainability of supply chains. So either government, either party's leadership in government is going to certainly make some focus in different areas. But I think fundamentally the U.S. needs Japan and vice versa. And so I expect that relationship to remain very strong. In terms of which are the personalities central to that, well, we'll have to see who's appointed in the future U.S. cabinet, as well as who are the leaders that either stay in the current cabinet or are shifted into it in recognition of changes in the U.S.
All right, Christopher LaFleur, Chairman at AmCham Japan. Thanks so much for joining us. And you can catch Japan Ahead every Monday, 8:40 a.m. Tokyo time. Subscribers can watch live on the terminal using the TV Go function. This is Bloomberg.
Take a look at what we're watching when it comes to just about an hour into the start of trading here in Sydney. We're seeing a little bit of upside, about 0.25% for Australian stocks. Of course, we're seeing essentially that sort of retreat for almost every asset class at the moment going into that US election uncertainty. Here, though, we're seeing health. Some of those property, real estate related shares have been rising. We're also seeing Kiwi stocks up modestly by about 0.25%. The Aussie dollar is also one of the few gainers against in that G10 space at the moment. We're seeing a bit of upside as the US dollar continues to see some weakness after that Friday surge. Of course, that stronger dollar, higher yield environment has been one of the classic so-called Trump trades, but we're seeing perhaps a little less conviction as we get closer to the big day. Well, Westpac has increased its share buyback on reported profit that beat estimates as high interest rates boosted the bank's margins. For more, let's bring in Bloomberg Intelligence Australian Financial Senior Analyst Matt Ingram. So I guess investors would be feeling vindicated about how expensive the stock is.
It's a funny one, Heidi. I think it actually clouds what's going to be a pretty bad 2025. There were two things that stood out. Competition did back off in mortgages, and I think that propped up the result in margins, as you said. But expenses, excluding their one-offs last year, were actually up 7%. Westpac's got this big restructuring going on that just won't go away, and that's going to drag into next year. And the RBA is likely to cut rates next year, which is going to impact margins and really hurt their profits. So, yeah, it was a good result, and the buyback is a nice surprise for shareholders, but there's a lot of bad news to come next year.
Yeah, what does this mean in terms of competition, particularly through the lens of the RBA potentially easing, as you say?
Yeah, Paul, look, it was all about competition last year. Basically, that ate away all the gains from the rate hikes. Looking at the results we've had, both CBA from the June results and now Westpac, competition stepped back and that supported margins. I think the banks might be preparing for those rate cuts. So we've seen sort of what has been a very big headwind turn to sort of neutral for this last set of results. We think that competition is going to stay less than it was. It's all about rate cuts next year.
When it comes to the other, all of the banks really, we've seen that cohort really benefit from the outflows from the miners, right? Is that going to turn around now, depending on sort of a lack of confidence going into next year?
Heidi, I think the banks become a dividend story and a buyback story next year, and it really depends on the capital payouts across the other sectors. The banks are yielding, the three that report in September are yielding about 7% with their buybacks. So it really depends whether the miners step on the gas with investment or whether they decide to pay back some more to shareholders as well. The banks' yields across the region look very cheap, and so really it depends what those other sectors do with their capital.
All right, Bloomberg Intelligence Australian Financial Senior Editor, Analyst Matt Ingram there. Let's take a look at how we are tracking on markets at the moment. We've been up and running here in Australia for closing in on 1 hour now. And the banks are not doing particularly well today. Financials just off by a few points. We've got materials weighing on the sector more broadly as well. S&P futures, though, look at that. They're pointed down again after a reasonable session on Friday. It appears that volatility is very much the name of the game this week, Heidi.
Maybe a little bit of an understatement. I feel like this is the calm before the storm, even, right? Taking a look at some of the currencies we will be watching, of course, we've talked a little bit about that yuan volatility that we've continued to see, but dollar yen will be an interesting one. And as I mentioned earlier, we had that kind of pullback in the dollar that we're watching. Maybe not so much conviction or confidence that this is going to be a clear result, or even that we get a clear result on election night, right? Lots of people saying that it could be perhaps the morning after, or even days, depending on how close it is. But dollar yen is sitting at that 152 level, and of course we continue to have political uncertainty within Japan as well, with the ruling coalition and the Prime Minister continuing to try and form and shore up that support before the November deadline. Dollar China looking like this offshore, I should say. We're also watching, of course, the Bank of England. It is not just the US election, but also a number of central bank decisions we're watching, including the BOE and the Fed. Both of them are expected to go 25 basis points. The RBA, though, watching for that reaction in the Aussie, given that we are expecting that cautious hold or cautiously hawkish pause, however we're characterising that. But Paul, crypto is one of the other things we're watching in terms of the so-called, Trump trade.
Yeah, crypto traders really diverging here on the election result, along with everyone else, along with the polls as well. So we've got the options market turning from, it was aggressively bullish, now looking a little bit more like a hedge-focused approach. So if we look at implied volatility for short-term contracts like 14-day puts, they've risen significantly. Calls with the same expiration, well, they're remaining stable. This is according to data from B2C2. So no clear direction here. We've got Bitcoin backing off a little bit by about 0.5% at the moment. The other major coins that we track, Ether, Solana, also a little bit softer. I mean, we've got 48 hours to go. Every poll you read tells you that this is a dead heat. It's very, very difficult to pick where this is going to go. And also, we've been hearing from former President Trump in the days leading up to Election Day. Already some of the rhetoric, Heidi, suggesting that, well, should the result not go the way he wants, this might end up being contested, and then who knows how long we might be in this holding pattern for.
Yeah, as you say, it looks like a photo finish at this point, narrowly split between both nationally and, of course, those pivotal swing states as well, right, as we see the Vice President, the former President, in that last leg.
This is the Asia trade. We're counting down to Asia's major market opens and kicking off what's going to be one of the biggest weeks that I think I can remember. I mean, we do, of course, have the US election coming up on Tuesday, US time, Wednesday here in the Asia Pacific, but also a whole bunch of central banks as well, which would normally be taking a front seat. We've got the Fed, the BOE on Thursday, and here in Australia, the RBA on Tuesday. So really a huge amount for markets to digest here.
Yeah, and of course we do need to get election day out of the way first, and that's assuming that we get a result on the night or shortly thereafter, maybe in the coming days, depending on how tight it is. And as you allude to, it is looking like a photo finish between the two candidates. These contrasting polls, I know we do assign quite a bit of sort of significance when it comes to the Kamala comeback in the Iowa poll, but certainly there is nothing out there that suggests that this is showing a clear winner by any stretch of the imagination. But that is probably also why, Paul, we're seeing quite a bit of people just sitting on the sidelines, because it's not just the election. We also have major earnings, including Nvidia coming up as well as these central bank decisions. So lots of other places where they could deploy their money.
Yeah, that's right. And in some respects, one has the sense that some markets are really nailing the windows shut ahead of a hurricane here. We're seeing a lot of volatility in a number of assets, but we've just had Korea open. Let's have a look at how we're doing on the Kospi. Pretty good to kick off the new week. Already ahead by about 0.25%. So if we check in on some of those tech names as well, look at the Kosdaq. That's in better territory as well. Got Samsung Electronics at the moment, one of the index heavyweights, gaining by about 0.5%. SK Hynix up by 1.2%. Both of those stocks had a pretty rough finish to the week. SK Hynix was well off the pace, down about 2.2%. So we also have the Korean won just giving up a little bit of ground against the greenback, 1,376 at the moment. We're not going to have any trade in Japan today, though, closed for Culture Day. Day, Heidi.
Culture Day, indeed. How lovely. Let's take a look at how we're going. We're an hour or so into the start of trading here in Australia. We're seeing modest upside. That's really the leadership from some of the real estate names, healthcare as well, about 1/4% higher. We'll be watching the miners as well, because we did see that first weekly gain for iron ore prices in about 4 weeks. Some of that optimism that the big package of China stimulus is starting to take hold. The residential property sales prices rising in October, the first year-on-year increase that we've seen so far this year. So a little bit of green shoots there perhaps when it comes to China. That could also be driving the Aussie dollar story there as well. But most likely it is down to that expected divergence. The RBA expected to stay at that hawkish hold level versus, of course, regional and global peers that have well and truly begun easing. 25 basis points expected from the Fed and the BOE this week. S&P futures looking pretty flat at the moment. That sort of retrenchment of big, bold bets on any asset class going into election eve is really what we're seeing at the moment.
Right, US Vice President Kamala Harris, former President Donald Trump remain deadlocked in opinion polls ahead of Election Day. There's a flurry of new surveys that has them neck and neck nationally and across the battleground states as well that are going to decide the outcome. Political news director Jody Schneider joins us now. So, Jody, there might be some encouraging signs for Harris out of these polls, even though they're so very, very close.
Yeah, Paul, there are a few encouraging signs, but first I must say these polls are very close. It really could go either way, and it could go either way in a number of states. That's what's so interesting here as the candidates make their closing arguments. Harris does have a little bit of something to be a little bit encouraged about in these polls. The New York Times Siena poll shows that she's ahead in 5 of the 7 swing states, including North Carolina and Nevada, which are states that, given what historically has happened for the Republican and Democratic candidates, are viewed as being in Donald Trump's column. So if she was to win those, in Wisconsin, which is also noted that she's slightly ahead in that poll, that would kind of get her over the top to 270 votes in the Electoral College, which is what you need. The popular vote these days doesn't nearly mean as much. It's really hitting that number, that 270 number. She also was shown as being ahead in a poll in Iowa, a very well-regarded poll, and that's a state that Donald Trump won in both 2016 and 2020. It's viewed as being a bit of an outlier. But what's behind this is there is really a surge in women voters coming out for her, particularly on the issue of reproductive rights.
So both of these candidates really pushing through to the last hour as though they are expecting this to be a photo finish.
And that's right, Heidi. Neither of them is giving up anything. And actually, they're out there really, their teams are knocking on doors, and, they have been crisscrossing the country. Now more on those East Coast states that are that are regarded as battleground states like North Carolina, Michigan, Wisconsin, and Pennsylvania, which is the one that is the most hardest fought of the states. They're making their arguments. Donald Trump is going after Kamala Harris on the economy. And Kamala Harris is going after him, and what would happen to democracy and to the future of the country if he were to to have another term as president.
Jody, have their arguments changed, or are the candidates sticking to their central themes?
Yeah, they really have in the past few weeks, Paul. They really seem to be doubling down. The economy remains the #1 issue among voters, and they're both really hitting that hard. Now, Donald Trump is doing that in ads. His ads take issue with the way that the Biden and Harris administration has handled the economy. Out on the campaign trail, though, he's colorful, and he says a lot of different things. Kamala Harris has been sticking to her message that she is the better one to lead the country. She's more stable, and that she has shown that she's competent through what she's done as vice president the past 4 years. Those are essentially their arguments. And of course, she's hitting reproductive rights. That's been an issue that her campaign has been hitting hard in recent months, and certainly in these closing days.
Bloomberg's political news director Jody Schneider there with the latest. My next guest says there is little evidence that either Harris or Trump has the US election in the bag. Let's bring Homin Lee, who's a senior macro strategist at Lombard Odier. So, Homin, what's the best way to kind of navigate this week?
Well, certainly it's the best time to make the predictions or portfolio positioning recommendations for sure. But the best way, in our view, and most intellectually honest way for investors to position for the election is to simply keep the portfolio close to the strategic asset allocation weights. In other words, some sort of a benchmark that fits the risk profile. And the reason is that it's basically impossible to predict the outcome at this juncture. As we have seen in the polls over the weekend, it's basically a 50-50 race, and the dispersion of potential outcomes is very large, and we'll likely see some potential surprises in some states that were assumed to be in the column for either of the candidates. So the best thing the investor can do is to really keep the portfolio level disciplined, wait for the event to occur, and then make reasonable momentum decisions after the event occurs. We think that's the best way to go forward. And if you look at the prediction market, bets on the probability of the either candidate, it's basically back to 50-50 at this point. So aggressive hedging opportunities are likely behind us. So the best we can do is to simply wait and see.
So what about some of the other event risks that we're looking ahead to, right? Multiple central bank decisions, not to mention some key earnings, including NVIDIA. Would you be assigning a little bit more attention to that, depending on, of course, what the outcome is and if we do get a definite and immediate outcome for the US election?
Well, the key driver for the market sentiment, of course, will be the U.S. election because of its impact on the dollar and the U.S. rates, which are essential for the decisions of the other central banks, especially on the emerging market side. So for that reason, we'll simply have to watch that event on Tuesday and how the counts proceed afterwards. But for the key central bank decisions, we think it's going to be more or less in line with what we have in mind. So for Bank of England, for instance, in light of the new budget from the cabinet, they're probably to go ahead with the 25 basis point cut. The budget helps with growth in 2025 a bit because there is spending that's going to happen. But inflation is trending the right way, and there are some underlying fragilities in the economy, including the labor market. So we think it makes sense for the bank to cut. And of course, you have the Federal Reserve decision a few days after the U.S. election. And here, we think, in light of the signs that the rebalancing is continuing in the labor market. So if you look at the job openings numbers and the quits, they certainly point to continued softening in the market. And also, the employment report in October turned out to be pretty weak. Now, it's probably due to temporary factors, but the overall context still points for some fragilities in the labor market, and this is something the Fed still has to pay attention to, and it's worth making a risk management rate cut in the upcoming FOMC. And the other central banks will basically take cues from that. So it will still point to a broadly supportive picture for the economy and financial markets. But again, the attention will be firmly on the election outcome in the U.S.
And also, what's your forecast around price pressures in the U.S. in 2025? Do you think we could see inflation making a comeback to, considering the spending plans of both candidates?
So that's an important question, and we'll have to see what the composition of Congress is like, in addition to the outcome for the White House. And, if it's a divided Congress, it's quite likely that we get some sort of policy continuity. Of course, on the Trump, there's still a possibility that even with a divided Congress, he can maybe push for the punitive 60% tariff on all imports from China. So if that happens, then we think there is maybe roughly 150 basis point upside potential for the PCE inflation starting in mid-2025, when the administration will be in a position to wrap up all the procedures related to the tariff and start imposing 60% on all of the China's exports to the U.S. However, if you have Harris victory on Tuesday, then certainly it's going to simply point to policy continuity, especially because, she will likely face a divided Congress. So, all the spending pledges that we're seeing from candidates, we will only worry about that in a Republican sweep scenario, for which we give roughly a subjective probability of roughly 35%. But other than that, we can probably count on policy continuity scenario. And if that's the case, assuming that China doesn't surprise with its stimulus in the coming week, we'll likely see a continued downtrend in inflation, which is consistent with additional rate cuts worth maybe 100 and 150 basis points for the U.S. Fed.
Yeah, let's talk a little bit more about China, because we're seeing election risk reflected there as well. We have a chart here showing expected volatility in the yuan over the next week. It's the highest since about 2011. Some of the other things featured on that chart there, you can see COVID, the crash of 2011 there as well. So where do you see the yuan headed in this kind of environment, post-stimulus announcements, post-US election?
So for the yuan, obviously the U.S. election outcome will matter a lot. I mean, this is something that basically all the investors know at this point, but it's still a binary risk. If Trump is elected, the likelihood of 60% tariff on China, which is roughly worth 1 to 1.5 percentage point of GDP, if it's implemented in the form that Trump is promising, China will have to respond, not only in terms of the fiscal policy and the support for the exporters, but if they're really keen on keeping the market share in the U.S., then they have to weaken the currency. So that's going to put some pressures on the yuan. And we think under the Trump presidency, the dollar yuan could rise up to 7.7 at least. So that's the scenario that we envision. But in the case of Harris' victory, it's going to provide a pretty nice tailwind for the currency. And basically investors are dealing with a 50-50 probability between the two scenarios. So in our view, we'll have to see what Beijing says with the NPC Standing Committee pretty soon. But that's it's possible after the election that the currency continues to face a bit of volatility.
I wanted to ask a little bit about your Japan call, because you've shifted from overweight UK to overweight Japan equities, despite acknowledging the fact that there's still, political turmoil at home and potentially abroad as well, and some degree of uncertainty over the Bank of Japan being able to nail its transition. What sort of makes you more constructive again for another leg of the rally for Japan stocks?
But first of all, the Japanese markets are pretty cheap compared to the other developed markets, especially the U.S. And it's a market that's quite cyclical. In other words, if you have a Goldilocks scenario with the growth broadening to the other economies outside the U.S., certainly it's a market that will benefit. So that's the fundamental argument for it. And the economic backdrop remains pretty positive. So we're seeing a rebound in the economy from the first quarter setback. Inflation is running pretty high, at least above the Bank of Japan's target, or close to Bank of Japan's target, and wage growth is still pretty positive. So the fundamental backdrop is still pretty good, and that certainly supports our case for Japanese equities compared to the UK equities, where the uncertainties around the budget policy has risen a bit. Now, politics is a bit of setback for sure, and we'll see if the terms of the minority government or the coalition government are finalized before November 11th, start of the special diet session. However, we also have to keep in mind that the weaker government could potentially point to slightly better fiscal policy. And we suspect that in the upcoming supplementary budget announcement, the Ishiba cabinet will guide for slightly less fiscal consolidation. That's going to help domestic demand as we head into 2025. And for the BOJ policy, we'll have to see, but there are a lot of noises from the Democratic Party for the People regarding the Bank of Japan's policy, but it's an independent central bank, so they'll probably go ahead with a rate hike. Ultimately, we don't think the BOJ will try to be very, very hawkish. The aim of the policymakers, in our view, is to simply keep the yen in a better range against the dollar. And for that, they'll probably have to intervene in the market or raise rates further. But we don't think they're going to be super aggressive about that endeavor. And for that reason, the overall policy environment will be either neutral or slightly positive as we go forward, mostly due to the fiscal policy development. And for that reason, we think this setback is manageable, from the politics.
All right, so Homin Lee, Senior Macro Strategist at Lombard Odier. Thanks so much for joining us. We have more ahead on the Asia trade. This is Bloomberg. China's top legislative body will meet in Beijing this week as investors watch for any approval of fiscal stimulus to revive the economy. For more, let's bring in our China correspondent, Min Lo, in Hong Kong. So, Min, give us a preview of what to expect.
Yeah, of course, all eyes will be on whether the government will approve a fiscal package and how big that would be, as well as the contents of it. Market expectations now range from between 6 to 10 trillion yuan of additional bond issuance to tackle local government debt and to buy back idle property and land. But of course, the content of it is important. And when it comes to tackling local government debt, how much of that bonds is going to be issued by the central government and how much of it by the local government, that is key to watch, because if the majority of these bonds are going to be shouldered by local governments, then it really isn't a form of fiscal expansion. Essentially, it's not really a pumping in of new money into the economy. But if it's a central government that is issuing these bonds, then it represents a shift in debt burden from the local governments to the central government. That will be a move that will be welcomed by the markets. Of course, we're also watching for whether there will be any stimulus targeted directly at boosting consumption. Anything beyond the current cash for clunkers program or the equipment upgrading program, that will be watched very closely as well.
We've also seen some measures to ease restrictions for global foreign investors ahead of the US elections. Are we expected to see this be effective, given we know the degree of trade uncertainty that's being posed here?
Yeah, it's been, really a wild few weeks on the Chinese stock market. The Chinese regulators have announced quite a number of measures to relax restrictions for individual overseas investors looking to be strategic investors in Chinese companies. They can now participate in tender offers, not just private placements and transfer by agreements, and they're shortening the lockup period for such investments from 3 years to 1 year. And these overseas investors, they only need to have about $300 million at the minimum, down from the current $500 million. But of course, whether it will be effective is another question altogether. The implied volatility, for example, for the yuan is really, for this coming week, is reaching an all-time high, or at least higher since 2011. If you look at the screen, the foreign direct investment in the past few quarters have really been deteriorating. So some of these measures have been a long time coming, but it's also perhaps China's way to mitigate the Trump impact on sentiment if Trump were to win the election.
Our Bloomberg China correspondent Min Lo there. Take a look at how European futures are opening ahead of what is a very volatile, high-risk week indeed. And we are seeing really investors in that part of the world as well trying to sort of strategize and work out how to navigate a potentially volatile election night, as well as how we could see potential beneficiaries. Investors in Europe preparing for a potential Trump victory. That could be a negative impact when it comes to regional equities, of course, on account of these protectionist policies. We're watching stocks in particular, like some of those export-reliant industries, renewables, anything with really US high sales exposure there, defense. Fossil fuel companies could see a benefit. So watching the moves in some of those sectors in particular. We're seeing Euro Stoxx 50 futures as well as German DAX futures trading to the downside at this point. And of course, we're also watching for that Bank of England decision as well. The rate cut is coming, but the budget also means that we could see a slower pace of easing after this expected 25 basis point cut. More ahead on the Asia trade. This is Bloomberg. Berkshire Hathaway's cash pile reached a record $325.2 billion in the third quarter, and the conglomerate also cut its stake in Apple again, this time by about 25%. Our finance editor Adam Hay joins us now. So what can we kind of glean by this?
Well, I think the big takeaway here is that we're seeing a continuation really high of that reduction in the Apple position, and it's of course been going on for some time now. We had another 25% reduction during the third quarter, but this is an ongoing thing there, and of course it's been well flagged. The tax implications has been mentioned in the past already, of course, and we heard from Apple themselves, didn't we, last week, and they were very cautious around that forecast that they were giving into the December period, projecting that low mid-single digit growth, which, you know, does speak and chimes quite similarly with what we're seeing in this reduction in position by Berkshire. So in some ways, maybe not too much of a surprise. And of course, it was a very big position. So what we've seen in the reaction is that analysts have said it kind of makes sense just to kind of bring down and trim that position a bit, and in a sense lighten that position that they've had in Apple for some time now. So maybe more of what we've been seeing, certainly gone up a notch, but part of the longer term trend.
Mm-hmm. And how about Berkshire's position in equities more broadly?
Yes, well, Paul, that's of course also come down. So they've been trimming some risk in equities more broadly. So that's about a 35 billion reduction in equities positions. And as you noted, with that cash pile now sitting at 325 billion, it clearly speaks to, you know, a lack of investment opportunities that they see for the immediate short term, and wanting to keep plenty of powder dry so they can dive in when they do see new investment theses arising. But of course, they're not alone there. You know, just here at the end of last week, we heard from Australia's sovereign wealth fund, their cash position has gone up as well. So clearly there's lots of people in the market feeling like they need to raise a bit more cash and keep a strong amount of cash, so that when we do, maybe into next year, get some dislocations in markets and in prices, then they're ready to pounce.
All right, finance editor Adam Haig there. More ahead on the Asia trade. Stay with us. This is Bloomberg.
Take a look at what we're seeing when it comes to currencies, particularly that fall in the dollar. The Bloomberg dollar index falling the most in 6 weeks, and in particular showing weakness against the Mexican peso. This is really kind of as the latest raft of US presidential polling showing such a closely held race there, and we are seeing the greenback dropping against most major currencies, including the yen and the Aussie dollar. Of course, we're also looking ahead to a Fed decision, a Bank of England decision, and the RBA decision as well. Relations between the US and China have faced multiple challenges in recent years, and both Republicans and Democrats are signaling a tough stance towards Beijing. Our chief North Asia correspondent Stephen Engel looks at how the US election is being viewed in China's corridors of power.
While Beijing likely isn't enamored with either Donald Trump or Kamala Harris, and Chinese leaders are not showing their hand, it would be overly simplified to assume China would prefer, say, continuity over unpredictability. Like the entire U.S.-China relationship, it's far more complex than that.
I think from a Beijing standpoint, they would prefer Trump as president than the Democratic candidate, because the track record shows that Donald Trump is not as anti-China as he's perceived to be.
And yet, Trump has made it clear that he would continue to take a hardline approach on trade with China, threatening sizable tariff increases on all Chinese imports.
I'm telling you, outside of love and religion, it's the most beautiful word there is, tariff.
Now, he has this crazy notion that putting a tariff of 60% on every single product imported from China is a good idea. Let me just tell you, this man has so little understanding of tariffs, he thinks that China pays for them.
Inflation, no doubt, is on the mind of U.S. voters, and Harris has blasted the former president's tariff plans as a Trump sales tax. And yet, the current Biden administration has maintained Trump-era tariffs on some $350 billion worth of Chinese goods and even added billions more on other Chinese products, including electric vehicles. Perhaps by design not to antagonize American workers in manufacturing swing states, Harris has been less specific on what her trade priorities would be, repeating that America must protect and build its competitive edge over China in critical sectors like advanced computing and semiconductors.
The third pillar of our opportunity economy is leading the world in the industries of the future and making sure America, not China, wins the competition for the 21st century.
There was a narrative that I think that was prevailing when this administration took office, that the United States was sort of on the verge of being surpassed by China as an economic power, that the United States' influence was waning in the world, that China's influence was on the rise.
And that's where geopolitical differences between China and the U.S. also hang in the balance. No one knows for sure how either candidate will deal with contentious issues like Taiwan, the South China Sea, Ukraine, and the Middle East. Not to mention trade policies based on national security concerns.
If Kamala Harris comes in, I'm sure it's going to be status quo, and we'll have the continuation of the current policy, which is driven by the national security lobby. To me, this is the policy that hurts China the most.
Or does it? China's not saying.
We have repeatedly stated that we do not comment on the U.S. elections and oppose any U.S. individuals making an issue of China during the elections.
At some point, we know China will inevitably take a stand, regardless of who's in the White House. Stephen Engel, Bloomberg News.
Well, let's bring in Amy Celico now, principal at Albright Stonebridge Group. She previously served as the Senior Director for China Affairs at the U.S. Trade Representative's Office. Amy, thanks so much for joining us. I want to begin, if I can, with the prospect of a second Trump presidency. I mean, he pledges on the one hand that he's tough on China. We've seen this movie before, but also on the other, he does like to take credit for seeing through a successful deal. So which of these two instincts do you see being the stronger under a potential Trump presidency?
Well, Paul, I think that is going to be a tension that will continue throughout his presidency. If elected, as you just said, President Trump has both an impulse to get tougher on China, to pursue, particularly in the minds of many of his top advisors, a more significant decoupling of the economic and trade relationship with China to reduce American vulnerability to reliance on China for national security as well as for economic reasons. On the other hand, as he also said, he prides himself for being a very good deal maker, taking a very personal approach to diplomatic relationships with the likes of Xi Jinping, other senior leaders. And so I think we have to take President Trump at his word. And his words have been diverse on the topic of China. And so I think this transactional uncertainty is going to characterize how he's going to pursue the trade relationship with China. On the one hand, I was looking for opportunities to pursue interests that he sees for the United States. But on the other hand, not really being willing to commit to one steady course vis-a-vis China. I think this is in contrast probably to how President Harris would approach China. But I think on President Trump, what is so important to capture is that he has a very big tent of advisors. He himself has a diversified position on China. And so uncertainty will certainly continue if he's elected. We could see a little bit of everything.
And under a potential Harris presidency, you see a de-risking rather than a decoupling. Can you explain to us a little more what you mean by that?
Sure. I think a Harris administration is going to lean into a lot of the policies that the Biden administration has been taking for the past almost 4 years now. And many of them are inherited from the Trump administration. So I do think one of the challenges for those of us in the United States looking at this election and trying to deduce who will be, quote unquote, tougher on China, who will be more willing to find a way forward on the commercial relationship. We see both candidates having so much in common on China that you have to look kind of beyond what they're saying about China and what they're saying more broadly about relationships with allies and partners, tariffs across the board, not just targeting China, but even our closest allies, a focus on infrastructure investment at home as a way to shore up competitiveness. That last point certainly is going to characterize a Harris administration. She says again and again and again that she sees tariffs as a tax on the middle class in the United States, and so I think she'll be more targeted in the use of tariffs as the Biden administration has been. But at the same time, she's going to look to our strongest partners in Asia, in Europe, to try to work with the United States, put pressure on China, and that is de-risking, also reducing vulnerabilities created by over-reliance on China, but not as wholesale a decoupling as you hear many Trump advisors talk about, like Ambassador Lighthizer, who certainly would want to be playing a role in a Trump administration. So we're still struggling really to define both of them since there are so many areas of commonality. But I do think a Harris administration will start off from the Biden administration and have a lot of consistency there, at least for the first year.
And there already is that basis of tech curbs and restrictions even in the last few weeks, right? How big a challenge is it for the next administration to be able to convince some of those Asian trading partners to be part of this alliance against Beijing?
Yeah, that's a great question. I think we're not going to have to wait for the next administration. We still have the likelihood of new rules being unveiled likely in November, maybe after the election. Biden administration will try to close some of those loopholes that remain, allowing some of our Asian and European partners to continue to supply China with semiconductor equipment. And so I think the Biden administration is going to take care of that in November, and really it will be the first of what will be many opportunities for our partners in Asia and Europe to either ride along with where the United States is trying to go on building this small yard, high fence policy, set of policies vis-a-vis China on technology trade. But it's going to be an area of tension. And if it is a Biden administration followed by a new Harris administration, I think those tensions with our closest partners in Asia and Europe maybe can be managed a little bit more easily than if President Trump comes into office, continues to want to have a pretty restrictive set of policies on technology flows going to China. He may have a harder time with Asian and European partners if at the same time he's suggesting levying tariffs on them as well.
With a pretty firm view of how another Trump presidency would handle Ukraine, do you think to extrapolate from that, Beijing would perhaps prefer that in terms of how they're able to deal with Taiwan?
I think it is. I think Taiwan is an issue where, again, I'll sort of repeat what I said in the beginning about President Trump. He's said a little bit on Taiwan that would likely reassure Beijing when he talks about being concerned with the United States carrying Taiwan in the event of a crisis, and insinuating at least that he'd be willing to negotiate around the issue of Taiwan with Beijing. That would be reassuring for Beijing, certainly. But on the other hand, it is hard to say, given how strong Republican and Democratic, but Republican support in Congress for Taiwan remains, that would be a bit of a sea change in policy were President Trump to be elected and try to change the U.S. policy towards Taiwan, which, again, reinforces the status quo and stability and no change in the one China policy. If President Trump wanted to change that, that could be welcomed by Beijing, but he could face some opposition here at home on that. So I don't think we can use his position vis-a-vis Ukraine and really directly apply that to Taiwan.
When it comes to what Beijing is thinking, obviously their economic revival plan depends so much on these industries that are being curbed by the US and the EU. Do you think that domestic economic weakness plays well when it comes to what happens in Washington? Is there leverage there?
Well, I think either administration, when elected this fall, whoever it is coming into office in 2025 is going to be looking at how do we maintain a relationship with Beijing without allowing increasing tensions, which are certainly going to continue in 2025, regardless of the outcome of the U.S. election, but not allow that to spill into the potential for conflict. And given China's economic challenges at home and preoccupation with addressing those challenges, I don't know that it gives the United States more leverage, but I do think for American companies, who of course are watching policy development so closely in Beijing and will be watching in Washington what the next administration wants to do, I think that will be in some ways incentivizing American companies to reiterate the value that they bring to the China market, but also the risks that they have if there isn't more stability in the way that Beijing and Washington are treating foreign investors who want to be involved in the China market. I think there's a little bit more leverage there for American companies. For policymakers, I think they're dealing with such a broad array of issues. I'm not sure that China's economic challenges at home are a good thing for policymakers in Washington.
Amy Celico is the principal at Albright Stonebridge Group there. We really appreciate your time. And staying with China, US, and the emergence of Elon Musk as one of Donald Trump's top campaign donors could help the Chinese president, Xi Jinping, if the former US president wins back the White House. For more, let's bring our China government reporter, Colin Murphy. And, how would you characterize Musk's relationship with China? Obviously, he's made inroads. He's always very well received by top-ranking officials. And how does that play into his relationship with Donald Trump?
Right. So I think one sort of way to describe it is codependence. On the one hand, Musk benefits from China because it offers a huge market, of course, and it offers scale of manufacturing and leading supply chain that you won't find anywhere in the world. But on the other hand, it also offers China the ability to tap some of Musk's and Tesla's, in particular, technology, its technology leadership. So these are basically the sort of the fundamental drivers of the relationship. And he has enjoyed special perks. For example, he has been granted the permission to have a wholly owned subsidiary here. And the country has become, the Shanghai plant has become the source of about half of all Teslas made globally. So it's a very symbiotic relationship, if you will. And in exchange, or in parallel, shall we say, Musk has come out many times in what can be seen as a sort of a very pro-China stances, whether it be on things like, for example, Taiwan, and how that should be ruled by Beijing, and so on and so forth. So in Musk, Xi Jinping has a good ally. Musk flatters China, flatters Xi, and potentially under a Trump administration, that might be something that the China side can tap. Now, of course, on the Trump side, Musk has, of course, emerged as one of the top donors, giving more than $100 million to the campaign. And obviously, his use of X platform in particular has been very much a tool for the Trump campaign. Now, there are areas where they do not see eye to eye. It's not that it's 100% aligned here, but for example, on the issue of tariffs on EVs, Musk obviously doesn't agree with the US policy to apply tariffs. So there's a close friendship, but they don't ally 100%. And how that will play out remains to be seen, of course. And the big question being whether, of course, the next president will be Trump or Harris. We don't know that yet, obviously.
Do I detect a whiff of expediency here? What could this mean for Elon Musk and for US-China relations should we have a second Trump presidency?
Well, I mean, there has been the talk about Musk getting a role or some kind of role in the Trump administration. Whether that happens in some sort of official capacity or whether it's more sort of able to attract Trump's attention, there's no doubt that this will put him in a very influential position on the new administration. And given, as I said earlier, the relationship with China is so positive and so strong, definitely he will have a chance to play this sort of go-between role between Beijing and Washington. To what extent and whether that would extend, say, for example, to geopolitics is another issue. My own sense would be that it would be limited, at least initially, to the areas like EVs. Trump has not been pro-EV by any means. So if Musk can influence him to maybe change his stance on EVs and policies related to that, that could indirectly benefit China and its EV manufacturers in the medium to long term.
All right, China government reporter Colin Murphy there. More ahead on the Asia trade. This is Bloomberg. Toyota, Nissan and Honda report earnings this week, with investors awaiting clues on the outlook for Japan's auto industry against a backdrop of faltering global demand. Bloomberg earnings specialist Rachel Yeo joins us now. So, Rachel, what can you tell us about the outlook for car makers in Japan?
Yeah, we're seeing a big week for many of these car makers, including Toyota and Nissan. So their earnings this week may not look the most optimistic for the overall sector at the moment, which comes amid more intense competition, production cuts, and faltering global demand. So many of these Japanese car makers, although they are still dominant in overall in emerging markets such as Southeast Asia, they have seen their market share, gradually being eroded by Chinese rivals, such as BYD, for example, over the last 3 years. And in terms of their longer term profit-wise, profit growth may stall in both fiscal 2025 and 2026 for these automakers, and weak sales may continue to persist in Southeast Asia and China. One other concern is that if Donald Trump gets elected as US president, he may have a plan to exclude vehicles that are not made in the US from a tax break. So that will be also something to keep a lookout for after the US elections.
We're still watching earnings for Toyota, Nissan and Honda. What are the expectations?
Yeah, so individually wise, for Toyota, we may see second quarter operating profit fall for the first time in 2 years. So this comes as, their profit in most of in terms of segment-wise, most of the regions may see profit fall except in Europe, and also its output may also be hurt by the recent vehicle testing scandal and also higher selling expenses. In terms of Nissan, similarly, they may also see operating profit fall quite a substantial amount. They are also dealing with inflation and weak sales across its major markets. But for Honda, it may be one of the standouts in the Japanese automaker sectors, as it's set to post higher earnings with more robust sales in Japan and the US as well. So they may see improved pricing and product mix.
Bloomberg reporter Rachel Yeo. More ahead on the Asia trade. This is Bloomberg.
Right, looking ahead to the China Open coming up next hour. We've got futures currently looking a little bit better for FTSE 50 China futures. TAIEX futures for Taiwan positive as well. US futures, though, a little bit softer. Volatility probably very much the name of the game this week. Of course, counting down to the US election, just 48 hours away now. We've also got a number of central bank decisions coming up this week as well. They've taken a back seat to that. The Fed on Thursday here in Australia. We've got the RBA tomorrow, Heidi.
Yeah, and of course the growth outlook, the fiscal outlook, the inflation outlook key for commodities as well. Take a look at what we're seeing when it comes to Brent and WTI trading at the moment. We're seeing a little bit of rise when it comes to oil prices. OPEC Plus pushing back that December upward hike by a month. We're also seeing that simmering of Middle East tensions as well. Iran threatening a crushing response against Israel. We're seeing some upside still continued for iron ore, which saw its first weekly gain in 4. Of course, waiting to hear more news of China's economic stimulus. That is it for the Asia Trade. Our markets coverage continues. The China Show is next.